It's a bit of a rebound that you're seeing across the Asia Pacific after the steep sell-off we witnessed on Friday.
Corporate loans have declined on a sequential basis.
So to me, instead of trying to predict what's going to happen, I think what's important for me and the team and for Wipro is to execute to what's coming in our way.
The core business is something that has done well because of higher oil prices, a better refining margin, and hence that will be the key driver for Reliance Industries this time.
And this 50% retracement stands at 22,276. That's the immediate number, about 150 odd points away from where we are.
Silver is currently about $28, $29 per troy ounce. It will cross $31, $32 per troy ounce.
We have given the detailed order, and I think if there is anything is there, they can come up. There is not an issue.
So we got a 120-point higher start on the Nifty.
They've ended FY24 with a top-line growth of 14.5%. The benchmark indices are holding up in the green. It's a gain of about 0.5%.
AUM growth is at 26.8% YOY and about 18% sequentially.
Remember that Election Commission declared the polling that took place in Phase 1 on April 19th as null and void amid violence and vandalism.
Well, the Monday had started well for the bulls, so we are near the 22,300 mark.
Well, it's a good-looking screen overall, I have to say, because the market's up nicely. It's holding on to the gains that we started with and perhaps is even building on it in more ways than one. That's the day so far. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleague Nigel and Reema should be with us as well in just a bit from now. Nigel, hi.
Well, hi, Prashant. The screen is looking good. And as you said, the real positive today is the broader markets. You have close to around 1,800 stocks that are still advancing in comparison to around 500 stocks that are declining. So that's point number one. Point number two is the Nifty is still holding around that 20 DMA. You like that at one point of time, it did get breached. But I think that knockout punch is needed, and maybe Reliance Industries could very well come in there and provide that. Just one more point from the broader markets. Polycab is the stock that's catching my attention. Post that, that IT report, the income tax problem that they had in December, the stock had corrected to around 3,800 from around that 5,700 odd mark. Guess what? Polycab is almost back at those levels of around 5,500 odd. So, it seems for the time being, the street is willing to look through that particular IT report and in fact focus just on the business and their vision to move to around 20,000 crores, Prashant.
Absolutely. And so many names, right? We'll talk more about these individual single stocks which are rocketing, and more than one. Now, just a quick few points at the state of the broader market, right? So to kind of take stock of where we are now as we enter the last hour. So the Nifty, after having sort of seen a big bounce from the lows last Friday, has now retraced 50% of a 1,000-point fall. So the rally was 1,000 points. The retracement was almost full 1,000 points was retraced. And today, as we stand, we've retraced 50% of this 1,000-point fall. Something that we highlighted is possible in the morning. Now, the Bank Nifty has retraced 61.8% of the recent fall. So it's doing better as compared to what the Nifty is doing. At least in this sort of phase, it didn't do as well on the upside, and of course, then it fell less as well. Next level for the Nifty is the 61.8%. So Nifty is retraced 50. The next is 61.8. That stands at 22,394. So we are at 22,280 right now. So this is another 100, 120, 130 odd points away from where we are right now. And then you'd basically, once that comes, you basically go and track the last high, which is 22,775. But in the interim, I think the market still needs to tell us emphatically that there is no new fresh leg down. And the only way to do that is by holding on and building on, even if it doesn't build on substantially like it is today. But it shouldn't break some of the recent lows and plunge the market into doubt that maybe this is just a dead cat bounce and nothing more, and there is more downside left over the next couple of days. I think the big risk, more than what's happening here, is what's happening with US indices, because on Friday, S&P 500 on a weekly basis closed below the 55-day moving average, which in the past has historically signaled a bit of a correction, a bit of a pullback. So I think that needs to be watched. It's a big earnings week out there in the US as well, in more ways than one. I think it's a bit of a near-term make or break if you're looking at the short term, really, in the US. And I mean, that, of course, has a rub-off here and everywhere else as well. So, maybe things are going to be a little more sanguine. Maybe we'll go back away from geopolitics, etc. We go back to talking about the good old, the interest rate story and how, that's been completely priced out of 2024, both in the US and, of course, here in India as well. We're talking about a rate cut maybe late into the year from the RBI, maybe one the middle of the year in the US as well. So lots to discuss, lots of specific stocks to talk about as well. So let's take it forward.
Oh, well, that's right. Let's focus on the frontline index first. A couple of these two-wheeler makers, they're moving higher. You pull up Hero MotoCorp, that's moved to the high point of the day, so good going out there. And for most of the trading session, you have Eicher Motors, which obviously hosts Royal Enfield. That stock has been one of the top gainers today. It's up close to around 3% odd. So that continues to do well. A couple of these two-wheelers, they're doing well. In the recent past, Bajaj Auto obviously has been the big outperformer. But for today, it's showing a relative underperformance. The stock is more or less flattish, but been a big outperformer in the last 12 months or so. Well, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, we started off gap up. We were up, I think, close to around 160 points odd at the high of the day. We're still holding with a gain of around 125 points. What's your view? Flirting with that 20 DMA? What's the trade on the Nifty?
Yeah. Nigel, I think, one, as I said, the movement which happened on Friday in the second half kind of ended the immediate declining setup. And we haven't got a reversal sign yet, but I think holding on to upper levels is a positive sign. So I think as long as we don't break down after a bounce back and we try to consolidate, I think we are maybe, preparing for some kind of strength for the Nifty to see and get past 22,300, 330 zones on the spot. Once that happens, I think we could see a test of 22,450, which is the gap level. So in that sense, I think, this is not a very negative movement. This will, in fact, encourage me to explore more of long positions. I have a buy on City Union Bank with a stop at 154 for targets of 161 on the upside. And Dixon Technologies is a buy with a stop below 76.90 for targets of 7920.
Just put up the stock of VA-Tech Vabag. The intraday will come up on your screen. Mitesh, I think we discussed this last week that it was very close to its highs. It's made a new all-time high. The first fresh new all-time high after you got to go back all the way to 2015 for the last high, which was 972. And I think today at the day's highest point, it's gotten into 4 digits as well. The high is 1,010 rupees. And it's a rocket from 145, 150 or so. The move started. And 2 days of kind of rest. And it's back to what it had been doing for the bulk of this year. And of course, a big mover in a very compressed time frame. Mitesh, just revisiting this one with you, VA-Tech?
I think, the move has actually been breathtaking, to put it very mildly. And now that the stock is into all-time highs, the highest ever the stock had done was about levels of 950, which was way back in 2015. I think they should see continuation. And now your 900, 915 becomes the accumulation zone in case you get the stock as a pullback over there again. And I would look at targets in excess of 1,200.
Okay, all right. Got that. Thanks a lot for that, Mitesh. We'll keep coming back to you as the show progresses. For the time being, let's focus on another stock, that's seen a big spike up intraday, SW Renewable. Well, as Sterling & Wilson Renewable Energy, the stock is up, I think, close to around 10%. Post its numbers and post the con call details as well. Vivek's been on top of that. He's joining in to fill us in with more details. Vivek, take it away.
Well, that's right. So Sterling & Wilson Renewable Energy, this particular quarter, number one, what's actually happened is that for the first time after 3 years, the company has managed to turn profitable as far as the bottom line is concerned. But, post the numbers, what actually happened was that the street was slightly concerned in terms of there not being a significant bump up as far as the order book was concerned. The stock opened up in the green, it actually went down and ended in the middle of the day, at one point of time, it was down 3%. But after that, the management had a call in the middle of the trading session today. And, they've given quite a few comments, that have actually assuaged all of these concerns. And as we speak, the stock is perched at the upper circuit. Number one, let's have a look at the numbers themselves. Q4 FY24 largely aided by the company going ahead and seeing very strong execution as far as the domestic EPC business is concerned, and also going ahead and using the proceeds of the QIP that the company did of close to 1,500 crore to reduce debt. Both the reduction in finance costs and the improved execution has ensured that the company has seen a very strong operationally quarter as well. So revenues high almost almost 13 times on a year-on-year basis, EBITDA of almost 30 crore versus an operational loss last time around, and like we mentioned, a PAT this time around versus a loss for the last 3 years. Now, when you're coming to, what is it the company said as far as the upcoming year is concerned and the conference call, number one, unexecuted order book is now in excess of 8,000 crore rupees. Q4 order inflows was close to 488 crore. This is something that the street wanted to understand. And then the company gave clarity on two major issues in terms of the order book and orders coming in. The first one, of course, was the Nigeria order. The company said that this particular order continues to remain in the works. They are in negotiation with the government over there. Another concern was that whether there would be given the fact that the Nigerian currency has depreciated, whether there would be a lower value of the total contract. But the management has indicated that it will be done in USD terms, so no worries over there, and they expect this particular order to come into the order book quite soon. Number two, Street wanted to know what is the status of the Reliance order. They said that it is expected in FY25 itself. Along with that, they did mention that few projects were delayed in Q4. Execution, they believe, will now happen in Q1 FY25. So Q1 is expected to be a lot stronger than Q4 as per the management. Strong commentary, guidance coming in, and clarity on two key projects, both Nigeria as well as Reliance, and that's what's aiding the stock move today.
Vivek, on Nigeria, did they say I think it's a large, right? I think from what I remember, $1 billion order, maybe more.
That's right. It's actually slightly higher than that. And this particular issue or this particular order has been in the works for September 20.
No, did they say will the order come in Q1 of?
Well, actually, they are still negotiating, but they are saying they are very hopeful and they are quite confident it will fructify in FY25. Hopefully, in the first half is what they mentioned.
And the margin concern has been sort of a lot of dumping from China. Anything on that?
Well, two things. Number one, they have given a core margin guidance for the first time. They're saying that they expect margins to be in the 11% range. So out of the total order book that they have, just around 10% or a little less than that is actually legacy orders, which are at much lower margins. So they're saying that the current order book actually has higher margin projects. And the other thing that's actually going to aid them is the fact that module prices have gone down quite significantly. So that too, given the fact that they will enjoy lower input costs, is also going to be something that they believe will ensure higher margins going forward.
Okay, all right. Thanks a lot for that, Vivek. By the way, you have the subscription details at the bottom of your screen for Vodafone Ideas FPO. The QIB portion is up 10x. It's subscribed more than 10 times. So that's a strong subscription that's coming in there. And for the retail audience out there, there's a strong possibility that you get allotted because the retail portion is still 0.6 times odd. I think the retail portion would qualify as 2 lakhs or so. Well, Deepan Mehta joins us of Elixir Equities. Hi, Deepan. Good afternoon and good to see you. What's your take on S&W? I mean, Vivek gave us a fair bit of details, Solar and Wilson. Your take, guidance is solid. That's why the street likes it, and that's why the stock is up close to 10%.
Yeah, Nigel, good afternoon and thank you for having me on your show. Yes, I think the numbers were okay. At least it broke even, but it's all about the future and the order book position. And management certainly has guided for much better times. And this entire renewable energy, especially solar panels and setting up our solar farms in India and globally, that's really getting a lot of investor attention and even, I would say, government attention. So from that point of view, Sterling and Wilson has a good future. And they had certain issues, which is why they went into the kind of debt problem which they had, but balance sheet quality also is far better. And from now on, I think you will see very decent results coming through from the company. But look, the stock price also has run up significantly. And even if you consider that next 2-3 years are optimistic and very positive for the company with solid profits, a large part of it has got discounted. So, I don't want to buy the share or recommend the share at these levels. But yes, I think it's an interesting company to follow, and at corrections, one can certainly look at it.
Okay. Deepan, good afternoon. Viatech Vabag, have you spoken about this one? We were talking with Mitesh earlier, broken out into a new high. It's all about, one is water, the other, the sun. We're talking about the elements out here. But your thoughts, Deepan?
Yeah, Prashant, good afternoon. And first, a disclosure, we and our clients are invested in it. And it's a stock I've recommended on your channel also earlier. So very pleased with the up move which we are seeing over the past several months or so. It is one of India's largest desalination player. And look at the way water shortages are erupting all over the country, especially, from coastal areas, even including Mumbai as such. And of course, they have demonstrated in Chennai that they have a fabulous up and running desalination plant. And apart from the actual execution of the project, they get very good revenues from operation and maintenance as well. As a strategy, the company has shifted more and more towards engineering and design and left the execution part to contractors. So that should improve their operating profit margins and return ratios. Last couple of quarters, I was a bit disappointed, but that's because global subsidiary has been sold and there is some kind of slowdown over there on the international front. But order book position is shaping up very well, and I think they are picking and choosing the orders they want to get into so that they are profitable. And valuations, I think, are still reasonable considering the potential which is there for a company like this, and also for the track record of the company. So from that point of view, I think we are positive on the company. As I said, we are invested, so our view to that extent may be a bit biased. But certainly at correction, this company is worth looking at and maybe having it part of your portfolio.
Dipan, hi, morning. Any particular thoughts on Persistent? While Q4 numbers looked very strong, we've seen a sharp correction in the stock. Valuations have always been expensive for the company at 35 times forward multiple given its high growth rates. But is this kind of a fall justified, and is this a good entry opportunity?
Yeah, good afternoon, Rima. It's really a high performance stock, and management has certainly, delivered results which are absolute top tier when it comes to peer group and what the industry can deliver. But they usually fall short. I think this time they may have fallen a bit short what investors and analysts have been expecting. And this entire thing, we entered the earnings season hoping that there'd be very positive commentary coming through from the IT management, but that hasn't really happened. And while the entire AI opportunity and pickup in tech revenues, there is expectation that it will happen because of various reasons, including improvement in the US economy. But all that seems to have been pushed back even further. So I think investors will wait a little longer for the tech spending to come back big time and benefit companies like Persistent and even larger companies like TCS, Infosys. And look, valuations again are not cheap, whether it's for Persistent or TCS, Infosys. So even mild disappointments on earnings front or on market commentary tend to have this kind of effect. And mind you, Persistent is a bit of an overrun stock when it comes to mid-cap stocks per se.
Okay, Sion, let's talk about GSPL that slumped as PNGRB cuts the tariff for its key HP pipeline network. Sonal is here with the details. Sonal.
Well, yes, it's a big impact and negative as well for GSPL as the regulator PNGRB has gone ahead and cut tariffs for one of its key pipeline, the HP pipeline that is, and the cut is massive. It's cut by 47% to come in at 18.1 rupees per MMBTU versus the current tariffs of 34 rupees per MMBTU. And remember, GSPL had sought tariffs of 50.8 rupees per MMBTU, so it's around a 64% cut from those expected levels as well. The street was expecting a cut because of changes in macros and volumes as well, but that was to the tune of 10 to 15% only. The management said that it is studying the order right now, and some of the brokerages believe that they could go ahead and appeal against it as well. Also remember, Gujarat Gas is in focus because GSPL holds 54.2% stake in Gujarat Gas. The EPS impact of this one, the most important, could be to the tune of 30 to 40% in FY25, and hence that big cut that we are seeing on the stock right now. The reasons for the cut, higher volume assumption by PNGRB versus GSPL, and the economic life extension of the pipeline beyond the period that was expected as well. On the back of this news, the brokerages, they have gone ahead and cut target prices and downgraded the stock as well. Nomura, for instance, has cut their FY25 EBITDA estimates by 37 and 42%, EPS estimates by 34 and 40% for next two financial years. They have downgraded the stock to reduce with a target price of 320 rupees a share. Citi has a sell on the stock and target price has been cut to 295. MK has downgraded the stock to a reduce from a buy and target price has been cut by 11%. Lastly, Kotak has downgraded the stock to reduce. They expect the company to challenge the order. But yes, because of this news piece, the stock is lower, and we spoke to PNGRB where they did indicate that GAIL's order is also expected very soon and it will be finalized by June. So that other stock is also in focus.
Sonal, thanks very much for that. Deepan, any interest here in some of these names? GSPL taking a big knock today, or not really?
Well, these are very highly regulated companies, Prashant, and they haven't really had a great track record. Occasionally, they do well because of certain regulatory benefits in their favor. or commissioning a new pipeline. But by and large, I think if you look at the gas distribution companies, they have been a bit of a laggard. They are more like utility companies. And in bull markets like these, you want to go for growth companies. So from that point of view, GSPL is an avoid.
Deepan, what about Voltas? What a dream move we're seeing on that one. The stock is up. I recall a few months ago, the stock was at 800 rupees. Today, it's on the verge of going to 1400 rupees. It's very, very hot. We're only in April. They seem to have found the right mix in terms of, the supply mix as well that they were looking at. And input cost, will catch up for them, but that will be with a bit of a lag. So the recent spike may not hurt them in the near term. What's your view at these levels?
No, I think it checks a lot of boxes, and clearly this quarter numbers will be quite phenomenal this quarter and the next. But look at the valuations, it's trading at very expensive valuations. No doubt it's got the Tata tag and it's India's largest air conditioning company. But results have been pretty erratic if you see the past 4 or 5 years or so. It's not been one-way growth. They have had many quarters where they have made losses or just about broken even, or even subdued profitability because of various reasons, including competition. So given the industry structure, given its position, given its track record, and no doubt, next couple of quarters may be good. When you look at the entire picture at these levels, I don't know whether the risk return profile favors the investor. In fact, Blue Star, if you look at that company, it has had a phenomenal run over the past several years or so. And almost sort of being a very marginal player, they have become quite a big player in the room air conditioning segment and clearly created their own niche and brand. So that's one company, I think, which has outperformed entire peer group, and in markets like these and industry like this, I think that, it can further outperform from these levels as well. And then there's Amber, which also will benefit from outsourcing trends which are taking place within the air conditioning industry, and PLI benefits, and they're creating nice value in niches which are operated by their subsidiaries. So rather than Voltas, I look at some of the other air conditioning companies. I feel that there could be higher returns over there.
Okay. Deepan, always great chat. Thank you very much for joining us here on CNBC TV18. Appreciate it, as always. That's Deepan Mehta with some perspective on a variety of names here. 170 points higher, 22,300 plus. So this is looking like a very good session, holding on and even sort of building on the gains from the early morning. Not very much higher from where the gap up got us to, but yeah, I mean, about 50 points, 40, 50 points above the opening level is where the Nifty is at. We'll take a break here. We are back. Dsha Irani will be with us of Helios Mutual Fund. That conversation coming up in just a bit. Welcome back. Our Alpha Manager of the Day is with us, Dsha Irani, CEO of Helios Mutual Fund. And Dsha, it's always a pleasure talking after exactly a month. Appreciate your time here. Polling has started. We are truly in the election season now. And of course, it's a long one this time. Results only by June. Last time we spoke, Dsha, you were of the view that it's going to be volatile, it's going to be choppy, not easy, not one way. And you were talking about earnings, interest rates. Some of these things have only been reinforced, especially that interest rate bit that maybe, over the last 1 month, the view has become that maybe no rate cuts this year. Maybe one, if at best. Just reinforced some of that stuff. How has your view evolved since the last time we spoke, Dsha? What are you watching? What's top of mind?
So, Prashant, first of all, thank you for having me on your show, and a very good afternoon to you and your viewers. So our views remains the same, Prashant. I think that volatility, if anything, has shown up quite a bit in the last 1 month. We expect the same to continue, at least till the time I think the election and the budget season is over. Only then one can take a fresh view of what's going to happen going forward. Having said that, interest rates, as we were pointing out, I mean, not only last month, in fact, we've been talking about this for a while, that we don't expect the cuts in interest rates to be so easily implemented by the Fed, given the fact that the service inflation is a problem being faced in the US, which is a localized inflation. I mean, earlier, the commodity inflation, they could have very well fought it because of the arbitrage of dollar vis-a-vis the other currencies. But the problem with service inflation is that you're buying services in dollars and, for services that are being offered in dollars. So there's no arbitrage here. So that is where our concern was. And I think that's what panning out to an extent. So interest rates, as you rightly mentioned, the view now forming is that probably one cut, that to the end of the year. So that continues to be the same. Plus, we had also highlighted the recent quarter, I mean, the March quarter, the earnings, bulk of the earnings are yet to be out. But our feel is that it will be a fairly disappointing quarter, given that the earlier 6 quarters just saw the re-ratings happening in the earnings as such. We don't see that happening in this quarter, at least. Whatever little results have come out, only the big caps have come out with results just now, but we're still awaiting the small caps and mid caps. I think that's where the disappointment will lie, because you'll see some kind of, disappointment in the results there. And that may just lead to some kind of a volatility in the market, given that valuations per se cannot be the only reason for correction. You need some negative triggers for them to work out. I think that's where it's awaited. So maybe this is the time to be a bit more careful, a bit more select in what you want to buy and stick to your fundamentally sound names. Obviously, the ones which look stretched, not only on valuations, but also on growth. I think those are the stocks that you need to move out of. So that is where I'll leave it.
Dsha, I remember HDFC Bank has been one of your preferred stocks. And after the big fall that we had after the Q3 numbers, you had said that I think you all were buyers in HDFC Bank after, in the correction that ensued. How have you read the Q4 numbers? And now it appears that the bank is prioritizing profitability over growth. So loan growth estimates have been brought down for HDFC Bank for the coming 2 years. Does that mean the stock goes into a bit of a range? Is it sideways? Your own expectation on how HDFC Bank will perform?
So, okay, what was the concern about HDFC Bank earlier? The concern was that they're not able to garner enough deposits to take care of the loan growths and stuff like that. Obviously, then the question was that if they are able to garner those deposits, will that come at a very tough pricing or something? One saw that in this quarter. I think they answered quite well. I mean, the loan growths the deposit growth was excellent, came via CASA rather. And as a result, the NIMs also improved quarter on quarter and sequentially rather. So that is one thing that stands out about a strong franchise, that once that machinery starts going, there's no stopping out. And that's what I think our comfort level is out here. Even after that, you saw that the credit deposit ratios have come down, the LDRs have come down, and obviously the liquidity ratios have improved quite appreciably as such. So it's obvious that there's enough and more left in HDFC Bank to grow if they want to, right? But I think they're being very careful in the growth because, as I said, that looking at the volatility, obviously they'll also look at the asset quality and probably work it out there. But our feel is that if the banking sector is to grow, this will be one of the leaders in the pack as such, and that's why we continue to be quite comfortable with the name. In fact, if anything, we've added to that name on every other correction that we've seen as such. So.
Okay, all right. Hi, Dsha. Good afternoon and good to see you. When the bank itself will be in a bit of a conundrum, right? Whether to chase growth or focus on the profitability. I think for the time being, the street would like what they said in the past con call, right? may not be very aggressive on growth, but focus on return ratios, focus on profitability and on NIMs. And I guess that's why maybe in the near term, the stock has made a bit of a bottom. Dsha, I wanted to ask you about the tech pack. Rima has been running us through the numbers of the last few days. And there are a lot of parameters that we're looking at now. Some of them are meeting estimates, some of them are beating on margins, but like persistent system, the numbers look good. The problem is the street was pricing in some improvement in the coming fiscal, which is unlikely to come about now. And valuation-wise as well, it's fairly expensive. How are you all positioned on IT? If I recall correctly, you all weren't very positive on the tech space.
Yeah, Nigel, you're correct. Basically, we've been fairly cautious on that space. In fact, we've been probably zero for a good part of over a year as such now on IT. And I don't think we're having a problem feeling that we're missing out something or something. But the fact is that I don't think that sector still has come out of the doldrums that is going through today. So what's the basic raw material for IT companies? It's manpower, right? I mean, the biggest indicator that they're giving you, I mean, the two largest players have seen a depletion in the manpower strength. I mean, this is the first time I believe that there's been a yearly fall in the manpower since the time probably a TCS is listed or for a very long time that I remember in Infosys as such. So it's obvious that they're also seeing some kind of a turmoil going forward as such. And secondly, I mean, the soundbites that came out on the calls also, discretionary spends continue to lag. There's no big contracts coming on discretionary side. The bigger contracts are only for cost takeouts and stuff like that. The smaller contracts have literally vanished from the table as such. There's consolidation of vendors going on and all. So these are not good sound bites that comes out of a healthy industry, right? And frankly, I mean, the biggest, I think the upside that everybody was playing for was probably interest rate cuts going into the future, and that may see the industry getting revived and stuff like that. That also is not panning out. So we'd rather be cautious and be on the sidelines of the sector than try to get into something where you haven't seen any valuation corrections happening. The prices have corrected, but the fact is the earnings also have got chopped off. So as a result, you are seeing the valuations remain more or less the same as what they were earlier. And as I stated earlier, the small caps and mid caps need some kind of a negative trigger for the valuations to correct. And you've seen that in the case in one of the IT names that you just mentioned as such. Everything was fine, just that the commentary wasn't that great, and you saw what's happening to that particular stock as such.
You own, got that and fair points, Dsha. Zomato, you own it. It's one of your top holdings and it's doing well. Small price increases is what they're taking, right? It's and when you look back and you kind of wonder, it could have been done, right? I mean, they've had a dominant position for a while. I mean, it's a duopoly basically. So in that sense, they have half the market. And if you believe recent reports, etc., because the other player is unlisted, Zomato has been gaining share. So the pricing power was almost there. They're exercising it now. Just your thoughts, Dsha.
So Prashant, actually that's what we were also bullish about. The fact that they can, they could easily increase a few rupees here and there, and then huge amount of revenue flows happening in the bottom line as such. But the fact was that like the competition was unlisted, privately funded, but of late it has gone through a lot of crunch, and the PE players in that particular company are also insisting that we need a path to profitability. So that I think gave a lot of breather space for the Zomato to realize that, okay, now I can do this changes in pricing and probably the competition will follow as such. And I think that's what's happening. Even in the hyper-local delivery segment that they have, the Blinkit, in Blinkit itself, they've seen that, right? I mean, they've increased prices and rather they've taken up subscriber prices and stuff like that. And the competition has followed soon. So I think that's what's happening out here. And that is a healthy sign also, because you're looking at now rapid growth in profits for the listed and for Zomato per se. And look at the base. I mean, we're talking about a huge base out here. The regular internet user base that is there is a potential customer base for Zomato, and they only have 2 crore regular users as such, and I think that can only grow from here. So potential is huge. Valuations are not looking that stretch if you look at a longer term basis. So we're quite gung-ho out here.
You know, there was one analysis, I think Anand Andon said that Zomato is estimated to do about 85 to 90 crore orders annually. So a 1 rupee increase in the convenience fee will have a positive EBITDA impact of 85 to 90 crore, which is approximately a 5% increase on their EBITDA. And platform fee is one of the three ways in which Zomato earns money. One of them is ad revenue, and the second one is commission from restaurants, and platform fee is the third one, and they've clearly flexed that lever. Thank you very much, Dsha, for joining in. That stock is up close to about 2%. We will slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment DStreet Chatter. We also get you a few BTST calls from our technical experts.
Welcome back. Take a look at a few stocks in the broader markets that are spiking up as we speak. Vascon comes up on your screen. That stock has moved to the high point of the day. Now a bit of a spike up is what we're seeing out there. And the other one is Skipper as well. All through the trading session, it's been moving well. And that one as well has popped up. I recall the stock had corrected from around 360-370 to around 300 rupees. Now it's up close to around 10% odd. But it's that time of the day when Nimesh joins us to give us an insight into what's going on DStreet Chatter. Nimesh, take it away.
Hi, Nigel, and a strong day for the markets. In fact, it's been holding on after a gap of opening, so that's positive. And today is backed by FI buying as well. So I understand there's a basket buying at the leading FI desk, and this buying is across a lot of nifty names. So I guess that explains the kind of move we've seen in some of the large cap names today. Within sectors, a couple of sectors which stands out in terms of institutional buying. One is OMCs, big buying interest in the entire OMC basket today, and so is the case in the private bank stocks as well. So that's come as a bit of a surprise that a lot of private banks are well bid by large institutions. And having said that, while a lot of the IT names are under pressure, but there is selective buying back in IT names as well. So while the screen is not suggesting a big buying into IT names, but at least from a flow perspective, there is selective interest in the IT stocks as well. I guess after the 2 days of up move on Friday as well as in today, we're back to that again to that resistance level of 22,350 on the upside. So that's the level to watch. But from today's perspective, from a flow perspective, it's a strong day backed by FI buying.
In terms of individual names, Nimesh, what are you picking up?
Well, a lot of individual stocks are buzzing in trade today, but in terms of individual stocks, the first stock on my list is Jio Financial Services. Post the quarterly update, that stock has seen a bit of traction, good buy flows as well. I understand a very large US long-only fund is an active buyer in Jio Financial off late and is bought today as well. So that's the first name. The second stock is Power Grid. Again, been consolidating in a narrow range of late, but for the last few days, there is a very high delivery-based marking happening. I understand some long-only funds are quite active as well. So again, in today's trade, you'll see a large delivery-based buying in Power Grid. So that's the second name. The third name is Exide. It's been a big outperformer in the last 15 days. Even in today's trade, it's up 5% at 52-week highs. But at these levels, some bit of selling seems to be creeping in. So looks like some bit of profit booking is clearly there from large institutions in Exide in today's market. And the last name is Biocon. Well, the stock is an F&O band, but from a cash stock perspective, there is a lot of bidding interest from larger FIs in Biocon as well. So that's the reason why, despite the stock is in band, the stock is up 4%.
Nimesh, on Geo Financial Services, anything? I mean, is it an anticipation or something? Because there's always a lot of chatter, right? I mean, they're launching out, they're rolling out this, rolling out that.
Yes.
And it is expected to happen, but the tie-up with BlackRock, etc. as well. Yeah. So market is expecting that to be rolled out. Anything else?
Not really, Prashant. Nothing specific to the reason why the larger FIs are interested, but clearly from a positioning point of view, from a flow perspective, a very large US-based fund is an active buyer.
Nimesh, thanks very much for that. So that's the list of stocks, as always, interesting, and we'll keep an eye out on these names in the next few trading sessions as well. Mitesh is with us. Mitesh, 170 points, so building on nicely on top of what we had earlier. Your 310 calls?
Yeah. So, Prashant, ICICI Bank is a BTST. Keep a stop below levels of 1080. Look for a 1105 kind of a target on the upside. And the other stock is Havells India, which is a BTST with a stop at 1540 for targets of 1575.
Okay, all right. Mitesh, thanks very much for that. So those are individual BDST trades from Mitesh. 170, as I said, 22,300 plus. Now, Nifty heavyweight Reliance Industries is set to report its fourth quarter numbers later today. Sonia is here to tell us what we can expect from the company. Sonia, over to you.
Well, Reliance Industries is all set to report their numbers, and we are expecting a stable set this time around. Let's take a look at the stock first. It's been a very good performance for Reliance Industries. The stock is up almost 30% in the last 6 months. In fact, in the month of March, the stock hit a fresh 52-week high as well. Now, let's go across and see what you can expect from the numbers this time. A decent set of numbers. So 2.35 lakh crores is what we're expecting on the top line, slightly higher than what they did last quarter. On the margin front as well, we are looking at the EBITDA to fall just a tad bit, about 2% or so, while the margins will be stable at that 17% mark. On the profitability, a double-digit up move in profitability is what the street is expecting this time from Reliance Industries. The core business is something that has done well because of higher oil prices, a better refining margin, and hence that will be the key driver for Reliance Industries this time, an improvement in the core refining margins. If you move on and talk about, the quarter-on-quarter performance, remember the refining earnings were impacted by shutdowns last quarter. So quarter-on-quarter, this will look like a good performance. In fact, across the board, whether it's retail, whether it's telecom, there will be a sequential improvement in most of the businesses. In fact, in Jio as well, the subscriber momentum will continue quarter-on-quarter. We are expecting 10.8 million net additions this time around to subscribers, and a continued upward bias to oil is something that should drive performance. That's the word coming in from JP Morgan. In fact, JP Morgan continues to maintain an overweight on the stock. Standard disclaimer, Reliance Industries owns the channel that you're watching.
Thank you, Sonia, for that. Moving on, shares of Voltas are gaining in trade after UBS upgraded the stock. Vamakshi gets us up to speed on that. Vamakshi.
Well, absolutely. Voltas is surging in trade today. Keep in mind that the stock has already surged by almost 38% year to date, and in fact was very short of the record high levels. In fact, UBS believes that the company has reworked its supply chain in the room air conditioner segment, and therefore it has further optimized its cost. Now, for new entrants, it will be very difficult to match the price competitiveness that Voltas offers, and as a result, they expect that the industry overall could enter into early phases of consolidation. They believe Voltas is expected to surprise on the market share front as well. The market share could reach almost 23% in FY26. Apart from that, as far as Voltbek, which is Voltas white goods JV with Beko is concerned, they expect to see improved traction here as well in the market share. The company did see a very slow ramp up initially, but they believe that Voltbek will reach a market share of almost 7.9% by FY27 and will break even at the EBITDA level by FY26. overall, they expect incremental revenues of almost 10,000 crores, 60% of which will come from consumer electronics segment by FY27. They've gone ahead and lifted their FY24 to 26 EPS estimates by 4 to 31%. They're expecting 20% revenue and 28% EBITDA CAGR from FY23 to 26, and they believe that relative to its peers such as Blue Star, the company's valuation is undemanding, especially given its improving prospects. So overall, given those factors, UBS has gone ahead and upgraded its rating to a buy. Target price has surged massively from 885 rupees per share to 1,800 rupees per share.
Okay, all right. Thanks a lot for that, Pharmakshi. So that's the one that we were speaking about earlier as well. Voltas, UBS fairly positive on that one. Well, we have market expert Anand Andon who joins us on the show. Hi, Anand. Good afternoon and good to see you. When the stock of the moment has to be Vodafone Idea. A big up move is what we have seen. The stock was down close to around 5%. Now, the street believes that the company will survive. Whether they'll thrive or not, that will be seen in the next few years. But for the time being, there it appears there's a play out here. And just pull up the intraday chart. It's moved to the high point of the day. The QIB portion, by the way, is now subscribed 15 times. Earlier, it was around 10 times. Now it's around 15 times. Anand, what's your view on Vodafone Idea? Will you give it a bit of a gamble, so to call it? Or you say, anyway, there's a price hike coming. I rather play the two larger players.
I think, the option value in Vodafone was there when the price was 5-6 rupees. Now it is no more an option, it is a stock. And just because it is going to survive, I don't think qualifies it as a buy. As you mentioned, if you are looking at a price hike, there are better ways of playing it because Vodafone has been losing market share, losing subscribers. The others have been adding. So if you are looking at benefiting from an incremental ARPU, the other two players will actually benefit a lot more. They have a much bigger base. If you are only looking to see whether or not the company will survive and therefore will it help to create competition, that itself is answered by the fact that, it is looking for an ARPU to survive. Without an increase in the average realization, it is very unlikely that, Vodafone will have the cash flows to be able to meet the kind of liabilities they have. And the government cannot go beyond a point in terms of conversion. So with the entire amount that is owed to the government, even that needs to be paid off at least in some part. Some of it may get converted eventually, but it has to be paid off. So when you're looking at a company, you want to see growth. To the extent that the share price has already moved up, I think much of that is already factored in, if at all.
Anand, between Blue Star, Voltas, Symphony, is this entire AC, cooler segment a viable option for investors to come in at this level? And between the three, is there a trade?
Well, I don't really look at Symphony very closely, so I can't comment on that. Between the other two, the valuation is half for Blue Star versus Voltas. There is no question that the segment itself may continue to grow. There is the season demands it. This is obviously going to be the best season for the companies that you mentioned. Whether you want to buy it at the valuations that they are trading at in the range of 60 and more than 100 to 40 times whatever. Even if you assume that Voltas actually doubles, it will still be trading at in terms of earnings, which it is likely to, it will still be trading at around 60-70 times. So you are looking at something which is coming off from a low base because of the fact that 2 years back they were doing much better. Then they went down in terms of earnings and now they are recovering. But you are actually getting back to a little more than where it was, let's say, 3 years ago. And for that, you're paying a humongous premium in terms of the overall valuation. So valuation-wise, not particularly comfortable on that space. Growth, I think you will definitely this will be a very good quarter.
Okay, one stock, Persistent Systems should come up on your screen. The stock is down close to about 10% despite good Q4 performance. One of the reasons could be the margin guidance in the conference call, where the company said the margins for FY25 could be flat. The company said during the next 12 months, given the challenging macro environment, our goal is to maintain top quartile growth. Top quartile means basically in the top, like industry leading kind of growth while maintaining margins at the current level. So the company is guiding for flat margins in FY25 versus FY24 while the street was hopeful for some margin expansion. If you go back and see the January brokerage notes, when the company reported the Q3 numbers, and you see what the street was anticipating in terms of margins for FY25, you would see that names like Nuvama, Kotak, they were all expecting a more than 100 basis points margin expansion. But now that will need to be recalibrated because the management themselves appear to be focusing on continuing growth in this challenging environment, and that may require they invest in sales, they may require those investments, which could keep margins on the flatter side. Also, remember, the stock has done very well. It's been a big outperformer given its strong growth. In the last 5 years, the stock is up 1,000%, up 300% in the last 3 years, and valuations too are fairly demanding at 35 times forward multiple. Anand, in the mid-cap IT space, Persistent has been one of the best performing stocks. Very strong growth despite all the macro challenges. Even FY24, the company's managed to report a 14-15% kind of growth. You're getting the stock 10% lower. Is it attractive enough?
Well, the entire sector is not particularly showing signs of being very strong in terms of growth. So when you're talking about top quartile, it's not necessarily a very aggressive kind of growth guidance. That said, it has definitely been one of the best executors in terms of where they have and how they've performed over the last few months. Actually, is reflected in the price. To the extent that it's also one of the most expensive stocks in the IT sector, it makes it a little more, little more difficult for it to maintain the kind of numbers that we are looking at, given the fact that the growth is not particularly high overall. So from the point of view of if you want to be in the IT sector, is Persistent a good choice? Possibly. However, will you actually make significant upside from here? I am not necessarily sure. But like I said, much of the upside that should have come through is probably already in the price and then some.
Okay, well, have to find sort of cheaply valued or fairly valued or those kind of names. Everything has been, of course, bid up quite a bit as you're telling us, Anand. Stay with us, though. We'll take a quick commercial break here. We'll come back and we'll talk about more names. There is some time to go. There's 12 minutes to go for the market closing. So we're back in just a minute or so.
Within domestic-oriented sectors, we were focused more on cyclicals, capital goods, auto, maybe financials. Those were the kind of sectors that were likely to do well. Chemicals and pharma both fall in the category of sectors that have not done well for the last 3-4 years. And hence, the opportunity has arisen over here. However, what I would like to say is that top-down sector view might not be the correct way to look at it, and more bottom-up stock picking in these sectors is what we should do. See, chemicals had a fantastic run from 2014 to 21, and that was a macro call of China plus one, and everything kind of benefited. China put production cuts and India put tariff barriers, so that kind of helped the players over here. But now now it is that particular trade is done. Now it is focused on which company has the ability to compete with Chinese or is not competing with Chinese, and which is the real specialty chemicals. Those kind of companies are likely to benefit going forward. So no doubt valuations have become much more reasonable. Outsourced IT servicing is what we do. That particular business model has matured. See, we had a great run for the last 25 years. The companies have gone up to create some of the best wealth in this country, and clearly that is feeding into the consumption as well, because these are all migrant laborers that move from maybe the tier 2-3 towns to some of the cities like Bangalore, Pune, and that gives a boost to the consumption, to the real estate over there. It's been a large factor, but going forward, I think their importance in the overall basket of consumption should reduce. And manufacturing as a sector is picking up, capital goods cycle is picking up. Real estate is only doing well at the premium end of the segment right now, not at the bottom. Affordable housing is not doing that well. So to summarize what I'm trying to say is that, yes, at this point of time, IT remains a big contributing factor to the real estate cycle, especially within the consumption also. I'm talking about the real estate, it's a big impact. However, going forward, it will reduce.
Okay, welcome back. So good going overall, 200 points now. So the last 30 minutes has proved to be favorable with the market adding about 35 points on the index. Anand, of course, is still with us. Anand, the other name we were discussing was Sterling and Wilson Solar and 10% higher today. It's not, we were talking about you finding a lot of stuff expensive and priced in. This one, I think on F5 25 earnings, trades at about 15 times. So not exactly very expensive. It's the right sector for sure. So I'm not sure if you've tracked it or you own it or have owned it in the past, but if you do, please share your thoughts.
So, I'm not sure whether it's the right sector, because while Government of India has been trying to push renewables and has been reasonably successful in doing it, fact of the matter is that, by putting tariff barriers in terms of, or increasing tariffs in terms of, imports, you haven't still managed to do much, because the global markets have actually collapsed, given the fact that, China is 70-80% of the market, and they have been trying to push their products. The US has stopped buying. In fact, they are incentivizing a heck of a lot more than India is in terms of being able to get manufacturing onshore as far as US goes. So from an Indian company perspective, you are basically dependent on the tariff barriers to be able to grow. There is no question with the change of ownership. There is no liquidity issue in terms of debt, etc. And the orders are quite good. So yes, you are going to be able to get earnings out of it. And as you said, it's not particularly expensive. But the kind of push that we saw for renewables, let's say about 3-4 years back, especially during the COVID, seems to have waned quite a bit. You can see that, for example, in the EVs, etc. There are now EVs which are not being sold. You can see that in the price of Tesla. So overall, I think the demand scenario, especially in terms of exports, is going to be a little challenging. Overall, I think, as I said, the growth will still be enough to justify the kind of share price that Sterling and Wilson is trading at. And the expertise that they have and the track record should enable them to get larger projects over a period of time. So yeah, certainly one of the better options among the various we have discussed so far.
By the way, Tejas Networks reports numbers later today, and the stock has spiked close to about 16%. If you could just pull up Tejas Networks, there is a sudden big spike seen in Tejas Networks, and it's risen on very large volumes. This is a company which has made losses for the last couple of quarters on account of the high inventory that they're sitting on. It's a company which makes telecom equipment. It's an R&D company. It makes telecom equipment, but that requires them importing certain parts. And because of the entire, concern around, geopolitics, etc., they've been sitting on high inventory. They've not been able to execute on all the orders on hand, and the company has been reporting losses. But Tejas Networks is, a stock which has seen a lot of action ahead of its numbers today.
Well, that's right. Well, Anand, request to just stay with us. Let's hear out to the chat we had with Hindustan Zinc earlier today. We had Mr. Mishra, who spoke about how he sees prices shape up both on zinc as well as silver, and also the production targets that they put out.
We are looking at price of around, we were hoping for a $3,000 per ton price in the month of December. But looking at the current sharpness in increase in prices, we believe that mark will be breached much before December. Somewhere maybe August or September, we should get a price beyond $3,000 per ton. Silver is currently about $28, $29 per troy ounce. It will cross $31, $32 per troy ounce, because the globally, we are now third largest in the silver producing company in the world. We moved up from 5 to 3, not so much by our increase, because of decrease in production of the many companies. Industrial use will continue to grow, whereas there is a recurring short supply of silver. So prices are bound to go northwards, and I see anywhere between $31, $32 per troy ounce is easily doable in the near future. No, I am not looking at that anymore, because we are on the drawing board to double the capacity of Hindustan Zinc in India itself. We are currently producing about 1 million ton metal. We are working with various consultants to double the capacity of output from mines, at the same time double the capacity of output from smelters. We are on the conceptual design development phase. Another 2 months, by July, our design should be over. And if the reports are favorable, we'll take it to board. Maybe August, September, sometime we can come to market and announce what is our next phase of growth. But I am surely looking at something way beyond 1.5 million ton, what we had predicted earlier.
All right, Anand, liquidity very less in Hindustan Zinc, but the stock has done very well. The only way to play silver, and as the management says, they're expecting a couple of dollars higher on silver. And zinc as well, they're expecting it around $3,000 per ton. Your view on this name, would you look to play it? And also, if you're going to look to play it, will you play it via Vedanta?
Well, Hindustan Zinc is a cleaner play. Vedanta has too many other issues as well. Though they are, given the fact that they are looking to break up the company, it may eventually get sorted out. Certainly, silver has underperformed except for the last few days, and to that extent has a lot of catch up to do. So it's quite likely that it will move up. Zinc is also looking quite positive. I have been somewhat bullish on the commodities metal space specifically for the last few weeks now, and it has actually been a place which I think will continue to do well over the next few quarters at least. So on both counts, not necessarily the best group that you want to be investing with, but given the lack of choices in India, it could be a company that could do well.
Got that. We'll leave it there. Anand, great conversation as always. Thank you very much for joining us with that perspective across a range of names. We will end at the highest point of the day, and I think just under for the Nifty, just under the 61.8% retracement, which is 22,394. We'll end at 22,373. So 20 points short of it. So 2 days, and it looks like the game is completely changed. A sharp 1,000-point fall from the highs of 22,775 to the low, which was 21,700 almost, and then big bounce back from Friday's low, which was 400 points for the Nifty, 1,000 points for the Nifty Bank, and today a good follow-up as well. So that's 1% today, by the way, day on day. Friday's close to today's close. The Nifty Bank continues to build on the gains as well, and that's about 0.9% in terms of the close that we have had. Mid-cap and small-cap indices will end 0.9%. Mid-cap index and the small-cap index will end about 1 1/3% higher. So the strongest of the four that I mentioned, of course, are the small caps, with the market breadth also ending with almost 2.5 stocks higher to about one stock, which was low.
Tata Consumer is the top Nifty gainer, ends with a gain of more than 3%, 3.5% almost ahead of numbers tomorrow. All banks did well except in HDFC Bank. So you had an Axis Bank with a gain of 2.5%, SBI up 2.4%, ICICI Bank nudging a 2% rally, but HDFC Bank was under pressure, ending with a cut of close to about 1%. L&T, Eicher Motors, Bajaj Finance too saw a fair amount of buying in the large cap space. And NTPC deserves mention. That's the top Nifty loser in the large cap.
Well, that's right, Rima. At the start of today, I said a few of the stocks that come out of the F&O ban, they deserve special attention. Hindustan Copper came out of the ban. That stock, in fact, did well in today's trading session. Besides Hindustan Copper, you had other stocks like Skipper that was up and about. Vascon was up and about. Big volumes being seen on some of these stocks. Even Sagar Cements that saw a sharp correction. Well, that one as well did pop up close to around 6%. It has been finding some sort of a bottom at around that 200, 210. It moved to around 230 rupees. Sagar Cement is the one that we're talking about, up 6% in trade today.
Okay, with that, we're going to take your leave on closing bell from the entire team. Thank you for watching, but stay tuned. Markets Forward is up next.